This makes me so disgustingly angry. It's not even funny, okay? Because here we are with this Nick Vlahos, right? He ran the company, and the company has this really good brand that I think is really because of Jessica Alba and some of the other team members. I don't think it had anything to do with him. So as CEO, it's really about execution, right? Execution. This company went public at $16. It's $1 or $2, right? Obviously, the stock price doesn't reflect it. The business results, this last quarterly numbers didn't reflect it. And what does he get? Does he just get fired? No. It's a $5.8 million CEO transition expense the company has to incur, right? And this is a frustrating thing, I think, for all of us that are stock market investors, is when a CEO does bad, they get golden parachutes when they get fired. And it's like, if I do a bad job, like nobody watches the channel, right? If you do a bad job at your job, you're canned, right? Like they'll can you. You're not getting a golden parachute package. They're bye. And yet for these executives, these CEOs, they could do a bad job and then they get millions of dollars because they get fired. Because they get fired for doing a horrible job. Isn't that something else? There should be some sort of rule where it's like if you do a crap job, you don't get a golden parachute. But these guys and gals, they still get these golden parachutes. It's one of the most frustrating things. And this is what obviously corporate raiders like the Carl Icahns and those folks have been speaking about for as long as, way before I was on this earth. Let's just put it that way. They've been frustrated by, how these companies are run, the executive packages these folks get. You do a bad job and you still get millions of dollars just to get fired. It's like, what a sweet gig, right? Do a bad job. It's almost like you want to get fired on purpose because then you get millions of dollars when you get fired. It's a beautiful, beautiful thing, right? A lot of people want to know, obviously, do I still think Honest is my next elf, right? Do I think Honest is my next elf? I would call it, it's not looking great, okay? I would say that it's not looking very good in regards to this whole situation, right? I'm hoping Carla turns around this ship and actually executes it. I listened to the conference call. She sounds focused on profitability, sounds focused on margins, all those things. But at the end of the day, that's all just talk, right? She came over from General Mills. She was a former vice president of Amazon, obviously. She's got a lot of good experience, but now it's like, dude, you gotta put up the numbers now at this point in time, right? And so I'm not gonna even get too excited about it because it is what it is, right? So I'm going to hold the stock, but it's a very, very frustrating ordeal. Very, very frustrating, right? So at this point in time, the bulls are in full charge. In any situation, we really win. From my perspective, right? If the market tanks huge, great. I get to buy stocks for very cheap. Plus, all my hedges are going to print money in that situation. I can go ahead and flip those into long positions, right? And if the market just continues to go up, well, I'm net long. So that'd be a situation where obviously I would just make a lot of money unless every day I have an Honest stock, which isn't very realistic in terms of that, right? And so for us bulls, we're the captain of the ship now at this point in time, right? And the bears are just really off sides. And every time they think they got something going for them, it gets shot down so quick now at this point in time. And it's been like that for really like the past 5 or 6 months. They get something, a hot CPI, and then that just kind of fizzles off, right? They get banking collapse, and the Fed's like, hey, we got it. We'll do whatever it takes to make sure everybody's deposits are guaranteed. We don't care if it's 250 or it's 250 million. We got it. And it's like, and so as a bear, you're kind of running out of these scenarios to kind of help yourself out, right? And never mind that, a lot of these bears, they played a lot of these put options and short positions. Meanwhile, being long oil and gas and stocks like that, and it's just like I don't know what they were doing, but that doesn't even correlate in regards to that. I mean, this if you're bearish on the economy and everything, you can't be bullish on oil and gas stocks. Like, that's not the way this works, or commodities in general, because those things all fall. If you know anything about an economic cycle in the downturn, if you are talking about the economy getting bad or anything like that, commodities are always hit and hit bad. And so, that whole situation is not just, I think bears are just really caught off sides this year. Just like we as bulls were so caught off last year. Okay. And, that's the market for you. That's the market for you. And usually bulls are 7 out of 10 years. Usually bulls are right. Then you get 2 years where it's kind of like, maybe both are right. And then you get kind of 1 out of 10 years that bears are completely right. And last year, damn it, those bears had us, man. They had us on the ropes and they were smacking us around good. Peter Lynch, Ben Graham, Warren Buffett, great investors, great, just some of the best you could ever listen to, right? I wish more people read some of their books over time, right? But there's an issue. A lot of people, they think that's too much work, so they'd rather watch TikTok videos than actually read a book nowadays. That's unfortunate. But I wish more people would read some of these books. And I also wish that a lot of people actually retain the knowledge they're being taught and actually practiced what these gentlemen preach. Because what these gentlemen tell you time and time again is you're not going to be able to time out this market. You have to stay optimistic. But people will hear this stuff from these great investors that have tremendously more success than anybody else, right? And they'll say to themselves, you know what? I think this time's different. I think my philosophy's better. I think, trying to time out the market and I'll go bullish when I feel everything's good again and those sorts of things. And they go against like everything they're taught by these people that have been through the markets before. These people have invested during inflationary times before, deflationary in times, recessions, maybe not depressions, but pretty close to that, right? They've invested during different turmoil in the market, right? All these different scenarios, and they're going to tell you this specific set of strategies, and people still go away from them because somehow these people think they're smarter than Warren Buffett. They think they're smarter than Peter Lynch, right? But in reality, they're just scared. They're just scared. And they'll make excuses on why they should do this or do that, rather than take advantage of deals in the market when those deals are presented to themselves, right? And they'll take a pessimistic angle rather than an optimistic angle when they're told time and time again that is the wrong angle to take on the market, right? And so it's unfortunate, but I just wish people read some of those books, and I just wish they actually stuck to what those folks teach, because what those folks teach is going to put you in a lot better position over time. And anytime I've gone against any of the principles I've learned in all the different great books over time, I can tell you I've been bitten, right? Unprofitable stocks, buying way too many unprofitable stocks. One thing if you own one or two, but when you own 5, 6, 7, now you're setting yourself up for, some huge losses if the market doesn't quite go your way, right? And so anytime I've gone against many of their teachings, I've been bitten personally in a huge way. So you will be too. But people think they're smarter and they think but really they're just scared. They're just scared, and it's unfortunate, okay? It is so important to work with urgency in the market, okay? And there's a reason I got a picture of Chef Ramsay here in the kitchen. And the reason being is if you know anything about like working at like a high-end restaurant or something like that, right? It's a very high-stress environment. You got to work with urgency. The reason you have to work with urgency isn't just so you get your food out on time to customers, right? But it's because if you're really trying to cook great food, the difference between 30 seconds, 45 seconds of a steak being on the grill too long, or a sauce marinating too long, or whatever is going on, right? Could be the difference between that tasting unbelievably like 10 perfection and like a 7 or an 8 or something like that. And so if you're Applebee's, you can get away if you cook the steak for too long, or you cook the burger for too long, if you season it too much or too little. You can get away with that. It's Applebee's. No one freaking cares, okay? But I can tell you, at a Michelin star restaurant, for instance, and shout out to anybody who's ever eaten at a Michelin star restaurant, everything needs to be perfect. The timing has to be perfect. The flavors have to be perfect. The seasoning has to be perfect. If it's being cooked, it has to be cooked for a perfect amount of time. And so you have to work with extreme urgency. And the stock market is no different. You have to work with urgency or you miss incredible opportunities. And there was a lot of folks that chose to not work with urgency in the back half of 2022 when tech stocks were just getting pummeled, and look at the gains they've missed out on. So far, we haven't even entered a bull market yet. Wait till the next bull market. Do you know how much those stocks are going to be up in the future? Do you know what those stocks are going to be up from where they were at back in October, November, December versus where those stocks are going to be in 5 years from now? And yet people choose to not work with urgency. I'll take my time. I'll come back in a couple of years. I'll do this. I'll do that. What are you doing? What are you doing, man? You're wasting time. You're wasting time not working with urgency in the market.